There is a generational wealth shift happening in the Nigerian stock market, and the banking sector is actually leading this movement. Now, when people hear of the banking sector, what comes to their mind is the heavyweight, the tier 1 banks, from First Bank, UBA, GT Bank, and the rest of them. No, but there are other banks whose fundamentals and earning growth potentials are doing very, very well. And most investors are not aware of it. So today we'll be discussing 4 bank stocks you need to know that you can invest now or take advantage of now and become a millionaire in few months from now. Although we don't give investment advice. Welcome to Clockwise. My name is Providence, and I have my guests as usual. Now, with a resounding virtual round of applause, welcome, Mr. Kanem. Welcome to Clockwise.
Thank you very much for having me.
All right. Now let's go straight to business. You see, when people hear of the banking stocks, the financial stocks, what they think about majorly is the tier 1 banks. If they don't buy stock in Zenith Bank, in UBA, in GT Bank, in First Bank, they feel that they cannot actually buy good stocks. But there are other banking stocks that are actually using the recapitalization policy of the federal government to meet up with the tier 1 banks. And they are showing a very good opportunity for investors to come in. So let's analyze those stocks, those other banking stocks. You may call them tier 2, you may call them mid-tiers, but they are not part of the tier 1 banks.
Okay, thank you. So, and you are very correct. Most times when people talk about banks, they talk about FOGAs. Because those are the tier 1 banks. Those are the banks that have the largest institutional exposure. So the people would like to go in there. But if you observe, there are some other very promising names that are not part of the tier 1 banks that also hold very, very great potential. So I'm going to consider 3 things in giving you some names that I'm thinking of. The first thing I would consider is strong liquidity, because again, Nigerian stock market, I've always said,
it's not deep.
It's not as deep as it could be. If you sell, we've seen situations where people have tried to exit positions,
but they can't.
And then
so you don't need to just buy names.
So you don't buy name. You don't just buy a name. You look at the liquidity. So we're looking at strong liquidity. We're looking at strong earnings growth potential, especially in high rates environment, as well as we also look at balance sheet expansion potential, as well as potential for re-rating with the Nigerian recapitalization policy. Recapitalization policy. Sorry. So when you look at all of these indices, then you can come up with some names that are not really among the FOGAs, but are also very promising. And one name that easily comes to mind in this regard is Fidelity Bank. Yes. Fidelity Bank is one of the most traded stocks in the Nigerian exchange group. By volume and by the number of deals. The bank is highly traded. Fidelity Bank also has very strong deposit franchise that allows, you know that banks are as good as how much they can loan out, because till today, interest income still dominates most of the bank's income. So that's why you see a lot of banks go out to mobilize deposit, because of course with those deposits they can lend out and earn and increase their interest income. So that works very well for Fidelity. But the important thing is that the bank is very liquid, highly liquid. Liquidity in a stock is very important. In fact, when it comes to institutional participation, of all the banks I'm going to mention today, Fidelity has the highest institutional exposure, because institutions consider liquidity even more than how much they can make. Because it's not just about going into a stock. Like I've told you time and time again, what you call your alpha or your returns cannot materialize unless you exit that position. So that goes along with Fidelity has that going along with it. It performs very well. Balance sheet discipline is very good. I like that for Fidelity. And then they've been having some moderate dividend paying history.
But they've not paid consistently.
That's why I said moderate. So so sometimes, like I told you, there are two things, though in Nigeria specifically, most Nigerian investors really look at
dividend
payments. But sometimes it's also good to look at growth. Remember the last conversation we had around dividend stock portfolio, and we said that some people would wait until when a qualification date is announced. They rush in, buy, and then with the hope of earning the dividends and then selling afterwards. And I told you something, that some people are blinded to a certain reality. What if you buy a stock, let's say a bank stock that at, let's say, 200 naira, hunting for a 30 naira dividend, or something like 10 naira dividend, for example, or maybe 20 naira dividend, and then you buy it at 300 naira, get the 20 naira dividend, but by the time you sell it, you are now selling at 240.
That's a lot.
That is being penny wise, pound foolish. So that's why even though Fidelity is not the best name when you talk about dividend stocks, but also look at capital appreciation. Yes, capital appreciation is very, very important for names.
So Fidelity Bank won.
So Fidelity Bank
are they in a good position in an entry position?
Yeah, I mean, you saw what happened even yesterday. The banks there was a very sharp correction in the banking stocks, and the reason was because, I mean, investors are literally taking a lot of profit. June is actually a time that people should really accumulate, because, like I mentioned, even before we got into June, I had told you that June would be, I don't expect June to be an up month. I expect June to be either a flat or a down month, and for obvious reasons. Number one, what drives trading in the Nigerian exchange group is basically earnings, dividends, and all of those. I know some names will be paying dividends, and all of that, and qualifications have been set. But those are about, I think, 12 names that we know of. But those are isolated cases. Among the forecast, it's only 2. And even those 2 have not even declared the date for paying interest. So when you look at what the incentives for people to really go into the market at this time is very low. So that's why, and people are literally even taking profits to book their their gains, kind of reshuffle some names, as well as rebalance their portfolio. Of course, ultimately, some people are even selling to be able to accumulate some dry powder to participate in the Dangote listing. So if you look at that, that tells you that some of this could be an opportunity.
Okay, Fidelity is one.
Fidelity is one. The other one would be FCMB. Yeah, FCMB. FCMB is a name that for me is it's a growth story. It's a growth story. It's a very strong turnaround story. FCMB is a name that, if you want to be part of something strong, it's FCMB. I remember when FCMB didn't even start as a bank. It started as a trading, kind of more than like an exchange, and then metamorphosed into a bank. So they bring a lot of experience with it. That's why it's a name. And for me, one of the things I like about FCMB is that its valuation is still low compared to the Fogas. So because I'm a value investor.
I'm a long-term investor.
Yeah, I'm a value investor. So I really hunt for names, strong names
that the potential to stay long-term.
No, strong names that have suffered some dislocation. Meaning strong names whose price or valuation don't match their fundamentals. I like to hunt for those names. Sorry to digress a little bit. Someone called me and told me, Bitcoin is down to 61,000. I said, good. That is I like it. Nothing has changed between when it was 126 and now. Nothing has changed in its fundamentals. So guess what? And then other names like Ethereum and those tokenization, nothing has changed. I buy those names. I buy them because I look through the bear market. I look through those temporary price downdrafts into what is the theme? What is the theme about this? The same thing with these banks. So some people chase names. I mean, over the past 3-4, about 1 week or so, there are some names, I'm not going to be very specific, but some names that have been, in fact, there's a name called International Energy Insurance PLC. That name has been picking up. It's been pushing very high. despite the fact that the asset is on offer, as in the stock is on offer now. The price has been shooting high, and you need to see how people have piled into those assets. No, I like to go into names that are criminally undervalued, buy them. It's what we call a contrarian play, where you buy against what the market is actually saying. Warren Buffett says, be fearful when the market is greedy and be greedy when the market is fearful. At this time, some of these names are bearing a lot of fear. So FCMB for me sits around that nexus.
Based on what you've said, we have a situation where traders or investors, especially retail investors, are usually moved by their emotions. We've said that over and over again. They are usually moved by their emotions. You see, the market moves mostly. You can predict the market in Nigeria. You can predict, because any little thing, you see people rushing. Then actually it takes you to be, you have to be a very, should I say, a disciplined investor to be able to do what you're saying, what you're talking about now.
That discipline is actually the alpha.
Okay.
And it comes from experience. I've been in the markets for the past, this is getting to 12 years. So I have had a lot of experience. I've seen a lot of bear and bull markets. So so even with that consideration, like a name I mentioned here, this FCMB, for example. FCMB performed well last year. So I'm not just trying to throw things to the wall and say which one sticks. No. FCMB did top line 50% year on year. Bottom line was 150%. Think about that for a second. So 150% in profit margin and 50% in revenue, top line revenue. So that is, I'm not basing my these names on just nothing. But I'm saying that some of these names are still at a lower valuation than the Fugas. And the thing is that, like I talked about, re-rating potential. These names have a potential to be re-rated. And when they are re-rated, that's where the alpha is. Most of those names, I mean, if you think about it, even the names like, you always like to reference GTCO. GTCO has done over, like I told you, over 300% in 1 year. So you are allowed it to simmer down a little bit before you begin to look at getting.
So FCMB is number 2.
So FCMB is number 2.
The number 1 was what?
The number 1 was Fidelity.
Fidelity FCMB. Okay.
Yes, FCMB. Then the number 3 would be Stanbic IBTC.
The bank.
Yes, I like Stanbic IBTC because they have a suite of products. Wealth management products, pension fund.
They're always known as the wealth management bank.
Yes, they have a lot of things that Stanbic IBTC is building what I call a moat. I mean, for those who are using Apple, who use Apple products, you realize that once you jump into that ecosystem, it's difficult to leave. And that's what NVIDIA is actually building. So when you have that, where someone let me tell you the advantage of this. I talked about previously, I talked about what we call the buy, borrow, die strategy, where you buy assets, you borrow against it. When you die, there is a step-up basis that actually ensures that you wipe up all your capital gains tax. Billionaires, rich people, wealthy individuals always like to bank with an institution that has a suite of services. Because when you are borrowing, for example, you want to borrow from a bank, but you are borrowing against what some of these are what we call asset-backed loans. So it should be, let's say, for example, the Stanbic Asset Management handles your assets. Then the Stanbic IBTC, the bank, is where you can actually get liquidity. And then you have, if you are on a pension program, the Stanbic pension program actually so you have that moat. When a bank has that, I know so many people that are even their wealth is they just invest
they're just there
in the bank. So, and of course beyond that, you know that Stanbic Capital is actually the one that is Stanbic IBTC Capital is the one that is the lead issuing house for the Dangote refinery. So this actually gives them a very serious potential.
I'm just surprised they're not part of the tier 1 banks.
I mean, there are some things that it takes to get into the tier 1 banks, but I mean that shows you that they can actually be re-rated accordingly. So these guys are really pushing. They are very liquid too. Yes, they're among the highly liquid stocks in them. Of course, not compared to the tier 1 banks though. But in terms of
They are great.
on the list that I'm mentioning, I think Fidelity is of course the most liquid stock. Then you
FCMB.
have no. Then you have Stanbic. Then you have FCMB.
FCMB. Okay.
Good. So that is that's that. So Stanbic IBTC is good. They have very strong track record in terms of performance. They did a very good performance last year, and then this year, of course, they are going to be very big. They are among the there are three, apart from Vetiva and First. There are three issuing houses for the Dangote refinery, and Stanbic is actually the leading among the issuing houses. So that among the advisors, so that's like a plus for them. I look at a very serious re-rating potential for this bank. So you might want to consider, if you are one of those that you might want to consider coming into this bank. Generally, like I've always said, if you look at where the Nigerian stock market is going, if the government policy, if the reforms that we have, FX reforms, if the market reforms that we have get sustained,
continues,
yes, I can tell you that the Nigerian exchange group will explode. Apart from S&P 500, S&P, listing, re-rating from the Nigerian capital market from B- to B+, and the FTSE Russell Frontier Market Index and readmitting Nigeria, there is also more potential because, think about when a $50 billion company gets listed on the Nigerian exchange group. That will push the Nigerian stock market to a certain category where people can begin to look at the market. Currently, we are still hovering around 116. Johannesburg, those guys have crossed $100 trillion. This is, if you think about that, then we still have a lot of growth to do. And in this regard, you see that even most of the companies, compared to what the numbers they are doing, the revenue they are doing, the profit they are booking, we have companies in Nigeria, the Nigerian stock market, that are doing triple-digit earnings growth. In the US, double-digit earnings growth, and people are losing their minds. Nigeria, you have triple-digit earnings growth, and with the FX stability, it means absolute returns are still very decent. So this holds a very serious potential, especially for the Nigerian banks that I believe. Nigerian banks, most especially, that I believe are still trading far below their proper valuation. I think generally investing in Nigerian banks in the long term, 5 years from now, would be one of the biggest and smartest decisions you have made as an investor. So that is Stanbic IBTC. Then the last one I'm going to mention on this list would be Wema Bank. Why am I bringing Wema Bank? Wema Bank, I've always told you, there's one of the things that GTCO has used and it has worked very well for it. GTCO is big on digital platforms.
Okay.
But Wema Bank is the only bank that has a standalone payment gateway. And that's by Wema. And if you know the volumes, let me give you something to think about. Do you know that MoneyPoint does over $26 billion in transactions? And this is something, they do these humongous figures on a monthly basis. They do billions of dollars on a daily basis, actually. Paystack, billions too. So there is a very serious opportunity in payment gateways. And as more people begin to buy things online, as more people begin to come online because of the AI revolution, that means that particular niche would become very, very lucrative. Already is lucrative.
Wema Bank is well positioned.
And Wema Bank is already, because they have a large. Speaking of, as a side note, I built I have a company, an AI company, which I co-founded in Dara.ai. And one of the names we're considering Alerts by Wema before even Paystack. But for some reason, for some consideration, we had to fall back to Paystack. But that tells you that this is a bank that is actually moving. This is a bank that is actually, this is a payment platform that is actually pushing high. That gives investors the feel of a tech not from traditional, but not just traditional banking, but tech. Because if you look at traditional banking, Wema Bank will not be so competitive. Because when you look at traditional banking, you look at asset base and all of those things, your balance sheet and all of those things. Wema Bank might not be competitive there, but you see, when it comes to things like payment gateways and all of that, that positions them to be very, very competitive. And remember, there is, I like the way you started the show, there's a generational wealth transfer. Guess what? It's going to the Gen Zs, it's going to Gen Alpha. And when this happens, these guys are going to work with banks that are already familiar with their touch points. One of which is payment gateway. If I use a payment gateway, I'm most likely going to use a bank that supports that payment gateway. That's why you see even payment gateways now, like Paystack, they are now trying to work with banks. I know of some payment gateway that are even like MoneyPoint. MoneyPoint is a bank actually. They have a payment gateway called Monify. So they understand that these things work together. They understand that the future is in having a payment gateway. And Wema Bank is already situated in that future. Remember, as a value investor that I am, I don't just look at today.
You look at the future.
I look at the future and I look at where should I allocate my capital, and then look at the
how
next
relevant will this business be in the future?
Yes, and look at the next 5 to 10 years to put my capital to work. I know when I talk to people about 5 to 10 years, they say, I'm looking for something that will take out tomorrow.
All right.
But there's something about, remember always that compound interest, which is, by the way, Albert Einstein says is the eighth wonder of the world, works with time. So leave time when you have, you can have short-term portfolios where you, something that maybe you are planning for a project, but the most, especially as a young person, most of your wealth should be in long-term assets that have very very great compounding capabilities.
All right. Now, before we actually go, I'd like you to arrange your portfolio because we've talked about even in our live last week. Earlier this week, we talked about the tier 1 banks. We are telling you the practical analysis of them. If the video is there or is still there on this page, if you were to arrange your portfolio based on should I say the tier 1 banks and the tier 2 banks or the mid banks and the rest of it, how will you arrange it? What percentage of allocation, what allocation will you give to each of them?
Of course, I would immediately give 30% to Fidelity. Yes.
Okay.
30% to Fidelity. I would do 25% to FCMB. That's already 55%. Then I would do that. I'm left with 40%. I would do 20%. Also 25. Another 25% to Stanbic IBTC. And of course, I would do the remaining 15. I think 15%. I'll do the remaining to Wema Bank.
That's wonderful.
Why I'm doing that is because Fidelity and FCMB will give me stability.
Okay.
Stanbic would give me that exposure to because of this suite of products they have, and I know that is like a Stanbic also gives stability too, but Wema is more volatile than the others. So Wema has growth potential, but again, it could also witness some very serious downdrafts because of the relative positioning of the bank. So, but I need to have those to also. I need to have more of my assets in more stable banks. I'm not saying Wema is not stable though, but remember, Wema Bank is a hyper growth play for me. It's a growth story for me. But you also want to balance so that you don't have a very serious dip of the portfolio.
Okay. All right. Now we've talked about Fidelity.
Yes.
FCMB.
We talked about before Stanbic IBTC and then Wema.
These are the 4 banks we'll be looking at. All right, thank you for coming. That has been the size of our show today. Thank you very much for coming. Now, on that note, we'll come to the end of today's episode of Clockwise. Now, if you want to join our community and also learn how to do analysis on your own, to look at the stock market and read the indices by yourself, we have a link on our profile page. When you just go to our profile page, you see the link to our community. Click through the link and you'll be brought straight to our community. And also, if you have any personal questions to ask us concerning your portfolio and the rest of it, we are there to answer and to respond to you. Now, don't forget to like, subscribe, and also put on the notification bell on this channel because of the amazing content we bring. And every day or every time we'll be here to ensure we show you every movement, the reason behind every movement in the stock market. My name is Providence. I'll see you again.